Now for a fireside chat with Graphene Ventures. Here to join us, Mr. Michel Aswad, Senior Business Development Manager in ArabNet, to interview Mr. Nabil Borhanu, President and Managing Member of Graphene Ventures. Please welcome them.
Good afternoon. Can you guys hear me well? Yeah, good. I'm here today with Nabil Borhanu, President and Managing Director of Graphene Ventures. Graphene Ventures is a multi-stage investment company that invests in high-tech growth startups. They are based in Palo Alto in California, the United States, and they started investing in companies in 2015. They have invested in some very high-profile startups like Snapchat and Lyft, as well as many other smaller startups at the seed stage. We're very glad to have Nabil with us today, where he's about to catch a flight later on. But Nabil, can you introduce yourself a little more? Let us know how you started and how you got into the venture space.
Thanks for hosting me today, and I hope that everybody can hear me well. Started my career basically at a small company as a projects engineer, and then I walked away like several years back with a little bit of experience where we started and spinned off actually a telecom company, and after that we got into sports and media. So we had 3 different ventures at the same time. At some point I just decided that I need to do something new, and I moved to the US. I didn't know what I'm going to do when I reached there. The only thing I knew that I have the confidence of building companies, but what I miss is the connections in the network. When I started building that, I identified a gap in the market between the Middle East and Silicon Valley. Most of the investors in the Middle East actually look at the companies at a later stage when the banks are looking at it. And this basically gets them to a point where they can miss a lot on the upside on the investment. And at that point, I just decided that it's probably a good thing that since I have the network in the Middle East, that I can connect the investors before the banks get to them, where they can actually realize more returns from technology investments. And that was the born of Graphene Ventures.
So why did you invest in startups like Snapchat and Lyft? What are some of the qualities that Graphene Ventures actually looks into before investing in startups?
So I guess when it comes to qualities, it's always different, but and it depends on the stage. Whether if you started having a track record and a reference points, that's much easier for you to start and determine what you want to do. So we had that on the back of the mind, but we realized that we need to start with the low-hanging fruit. So talking about a company like Snapchat was much easier for an investor to understand the thesis behind it, because eventually investment is about psychology and sentiment. So if the investor is going to believe it's not only the vision that you're having for this kind of investment, it was more towards more or less that you're getting into technology, something which they're not used to. So it was much easier to understand from their surroundings. If you talk about Snapchat, they'll see their kids, their families, the surroundings are talking about it. So it's an easy sell. Yet we believe that the value for Snapchat was the future TV, not only the social media aspect. We've seen this from day one, and we still have a huge bet when it comes to that future for the company.
And if you look at Silicon Valley's investments currently and in the foreseeable future, what are some hot spaces that you guys think that will be the next leap in disruption or business transformation?
Well, obviously, I think technology today is almost getting everywhere. We see a lot happening with the biotech aspect. We see actually more happening with the self-driving autonomous vehicles. A lot of people actually challenge that and think it's like far away. But in fact, Google is just 15 minutes away from my house, and I can see the cars actually being tested on the streets. You see what other actually car manufacturers are doing in that space. Everybody talks about artificial intelligence and blockchain. I think blockchain is going to change a lot on the space. People think about blockchain only as cryptocurrencies because they look at Bitcoin and the others. But in reality, we are interested in blockchain as a technology, not as currencies. And I think that's going to change the whole internet scape pretty soon.
And we were having a chat about that, and that was one of the criteria that you guys look into before investing, is the technology behind the startup as opposed to just a startup.
Yeah.
So it's the technology and the talent was what you mentioned, I believe.
Yes, yes. Actually, because one of the major things is the team behind the technology. The technology can always be there one way or the other. It's the question is, can the team execute on the technology? Can they deliver or not? And at the same time, one of the aspects you look at it most of the time is the exit. And that's the big question that any venture capital has. You have two ways to exit. You're either going to look at M&A or you're going to look at an IPO for the business. Both actually always worry about the team, because part of the M&A importance is the acqui-hire and the technical talent that you already have. If you have a normal team, nobody's going to look at the company. They'll just get the technology and walk away, and it's actually going to bring the valuation down, which I don't want to have to my investment.
Interesting you speak of IPOs. Now there's a lot of discrepancies between the public and private funding. Yeah. Recently Snapchat went public. Blue Apron is another startup that did so as well. And rapidly after, you saw their stock price drop to almost half. Why is there a big discrepancy between the private funding of investors and the public funding when they go IPO?
Well, there are several factors. One of the factors that you look at is the timing of them coming into the market, and whether the economy is doing well or bad, doing good or bad. The other aspect is also looking at what can be done on the behavior of the stock and who is the holder, whether it's being institutional or individual investors. And then people look at lock-up periods. So sometimes there is a huge number of stock that comes in after a period of time. So towards the lock-up period expiry, you'll always find a drop on the price.
Understood. So you expect the price to go back up?
We hope so.
Okay. How involved are you within your investments? How do you add value?
Well, we're pretty active when it comes. So we're not the kinds of guys like who just write a check and move away. We strongly believe that we don't need to invest unless we can add value from a talent perspective, business development when it comes to international markets, because we have an operational background. Someone like me, I come from Middle East, I understand the market, I understand what are the requirements here. So we opened the doors. We were very much involved in the strategy of Snapchat when they wanted to come to the Middle East. So at least we had to challenge the thing that they were thinking about, and eventually they went with the recommendation that we had for them. And we're actually replicating this across every single company. So we do it at late stage, we do it at early stage. And the benefit from doing it at late stage, because most of the US companies only think about the region at the late stage, so we do come with a value-added proposition to them, just like not unlike the other ones actually on the cap table.
Okay. And we will be hearing about Snapchat tomorrow, I believe. Their team is going to be here speaking for the first time. Yeah. We also, since you were talking about the region, why haven't we seen any investments from your end in Middle Eastern startups yet?
One was actually the fund mandate did not include the Middle East and the thesis. Second, actually, it's a lot of the legal structure. We heard just a little bit earlier about the structure having something in the Cayman Island and then going to somewhere else just to own a subsidiary that's actually the original company in probably somewhere in Saudi Arabia, for instance. The second thing, which is very important again, is exits. I don't see any exits that are a good trade-off for the risk and reward when it comes to an investment in the region right now.
Okay. So you don't foresee any unicorns in the next 1, 2, 3 years maybe?
It depends. Now, what I see in the region is actually a lot of overvaluations are taking place, which is pretty weird at an early stage for something as such to happen. I would love to see a unicorn which is driven by fundamentals, not a unicorn because we just want to have a unicorn in the space in the region. It's not something that you need to brag about. It's actually something that you want to be proud of. You be proud when you have something which is solid. It's not something that gets a valuation and then the exit would look different. We had a unicorn like Souk at some point, but when Amazon acquired the company, it was not a unicorn. So I would love to see a unicorn all the way going up, not like at a certain point it gets into a friction point and it bounces
It was
back.
almost half the price.
Well, I don't want to comment on that.
So you feel, though, that the startups in the region are overvaluing the value of their companies?
Right now, yes, and I guess a lot of people are driven by what they see on Crunchbase and the other places, which is very wrong. One of the things that I noticed that I can see in the region today is I can see some kind of a Silicon Valley valuation. In reality, what people need to understand is you don't even see Silicon Valley valuation replicated in Midwest in the US, but I see it in GCC, which is very weird.
And how do you comment on that particular part? What
Well,
is the attribute to it being so high?
I think because there is a lot of money being thrown at them, so there is some kind of a competition from investors to get into the company, especially if they see some numbers and they start feeling that this is going to be their 10x multiple. And I guess this is very risky, and along the way, a lot of people are going to get their hands burned, and that's going to create a lot of trouble. Yet, the real advice that I would just go for entrepreneurs and even early investors who are trying to drive this kind of valuation is you need to be realistic, because the question is the next round. How are you going to value the next round? You're going to reach a point where a professional fund manager or investor would look into the company and will think at that point that this valuation is pretty big and you need to bring it down. A down round is just going to show that you've been ignorant at a certain point about what you're trying to do.
Understood. What mistakes have you made that you have learned from along the way that you've been with Graphene Ventures in 2 years now?
Well,
Tell us a funny
I've
story.
been trying to learn even before I get to Graphene Ventures, and I guess we learn every day. Several mistakes. I mean, I think on some of the investments, I actually did not negotiate hard enough. And I missed some of the rights that we should have been there in the agreement. Yet, this is something that you learn on a daily basis. Like every single investment, you get you're taught a lesson by that investment. And one of the things that actually now I learned a lot from was not forcing entrepreneurs to report to you like an investor update every month. So some of them actually, once they get the money, they take it and run away, but you need to get that done.
So you need to get more involved.
Yep, not that involved, but you need to, they need to be disciplined.
So
So
they're overvalued and not disciplined at this point.
Well,
okay. Tell us about an investment that came your way and you passed up, or you lost the opportunity to invest and you kind of regret to this day.
well, I'm sure that during the journey of being a venture capital, you will be regretting a lot, and sometimes, I mean, losses and missing out some of the opportunities. One of the, like 6 weeks ago or 7 weeks ago, I mean, one of the companies sent us the deck and they asked me to see it immediately because they needed the money at that point. And they said, like, we're closing. Normally, I don't believe that I have to be pushed by someone telling me that we are closing pretty soon. So if they close, it's fine. There is another opportunity that we're going to see. 4 weeks later, I looked at the company. I liked it. I just called up the founder, and he told me we just got acquired by Google last week. And it would have been like the greatest story ever. I mean, you're going to exit a company within 4 weeks from the time that you put money in it. But I mean, I have to get used to it because a lot of them, that's going to happen.
Yeah, missed opportunity right there. What are some of the similarities between the startups that you have invested in so far, like Beta, Lyft, Snap? There's a lot of children-based startups as well, like technology behind these kinds of apps.
Yeah.
So what are the similarities between these different companies?
Well, when we look at the domain, it's not about like just focus on children or not. It just happened that, I mean, it was a coincidence. We mainly focus on the team and the sector. I focus mainly on the technology and the multiple applications of it. People think about, I mean, just as an example, 2 days ago I was talking to an investor when I was in Riyadh, and he looked at Geobit, one of our portfolio companies, and he's like, this is just another tracking company where you just have a clip with a kid knowing where they want to reach. In fact, that was not the reason why we invested in the company. The reason was actually behind the tracking technology itself, because the more accurate the technology is, the better it is. And that's the core thing about the tracking and the multiple way of this technology and how it can be applied. Funny enough, today, the the Department of Defense in the U.S. are thinking to invest in the company, and this is pretty good for us because we focus on something that has been fundamental in the business, and that's what we've been actually looking at every single company, aside from having a solid team that can execute.
How would an entrepreneur get your attention? At least, you haven't invested in Middle Eastern startups yet.
Yeah.
If someone's sitting here in the audience, grabs you right before your flight, gives you a 2-minute pitch, what would you want them to say?
Well, if I know that they know their business and they do have, they've cracked the growth of the requirement for growth in their business, that's something which should be very catchy. The problem is, if someone is just thinking about having another 100 million real business, for instance, that would not be attracting because you're actually throwing money for a huge risk and you want to have a good return, and it's also for them. The problem is some of them don't think about sticking in the business, and that's one of the discussions I had actually earlier today here. Some of the entrepreneurs think that we need to grow the business at a certain point and then we're going to exit. The reality is they should not be exiting. The investor should be exiting, but the founder should always be there. Yeah. That's why you see Bill Gates was engaged for a very long time in a company like Microsoft, Larry Ellison with Oracle, the founders of Google and Facebook and all those guys. They're going to be there forever. The only thing, if you think that you have reached a ceiling for the business, the only thing that you need to do is identify a new vertical, grow it up, and then start doing the business. And that's the way that you expand your business. But you don't leave your company. You never do.
Okay. So I guess that you're saying that a lot of people want to be serial entrepreneurs as opposed to an entrepreneur. But another question that comes to mind, would you invest in a company like Kareem?
Well, I've done already with Lyft, but the question is,
but Kareem, a local one.
Kareem now, I guess, they should be, an exit should be actually coming in, I don't know, within the next 24 months, if not before. It's pretty tough. I don't have the numbers, but if the numbers are actually telling me that there is some room for an upside, we are there for the upside. We're not there just because of the luxury of the business.
Okay. Would you have invested in Souk had you had the opportunity?
That's a very tough question, but I rather invest in a smaller company because they were too big at that point. And I think I personally very much and strongly believe that Souk was pushed to get to an exit because of Noon coming in, and they've seen the threat, they've seen the money. It is like it's a do or die. They didn't have enough cash to pursue the business. So that's my assumption. It's not an information that I have. It's just a part of the analysis I did at the time. So I think they were pushed. Yet it turned out to be in their favor somehow, which is good for the region in general.
Great. I think we can ask a few questions from the audience if we do have any questions. Anyone? Do we have any entrepreneurs in the audience that would like to ask a question? Now's your chance. You could be the next Snapchat right here. Okay, great. Thank you very much, Nabil. It was a pleasure having you. Thank you very much. Have a safe flight back home.
Yeah, sure. Thank you
for being with us.
Yeah, sure. Thanks a lot.
Allah.